For DAC7, it's gig economy income is the blind spot. The tax authorities have no way of seeing how much income people are earning on these platforms. The penalties are quite hefty, actually. HMRC is definitely going through a phase from light slaps on the wrist to taking these compliance situations really seriously.
What is DAC7? How does it affect short-term rental property managers? And what are the penalties for non-compliance? Natalie Dowling from Hartford Consultants is the special guest on today's Host Planet podcast, and she'll be answering all these questions and more on today's show. Natalie, thank you for joining us on the Host Planet podcast. What is DAC7 and why was it introduced?
So DAC7's full name actually is the Model Rules for Due Diligence and Reporting for Digital Platforms in the Sharing and Gig Economy, which is obviously a massive mouthful, and that is why we use DAC7 to describe it, because there's not even a good acronym out of that massive title. DAC7 is actually the name of the EU directive that covers these regulations. So technically, it's not what we're under in the UK; it's the EU side of the rules, but it's the easiest thing that's going around for us to call it. The DACs are the directives for administrative cooperation. And as the name DAC7 suggests, there are 6 other directives that precede it that are all in the same line. These types of regulations, they're called the automatic exchange of information. Some people call that AUI, and that doesn't roll off the tongue much either. But basically, these types of rules have been around for about 10 years. They're mainly for financial institutions before this one was released. And they are international information sharing models for tax authorities that close blind spots that the tax authorities might have. So, for example, the DAC2, which is called the CRS, the Common Reporting Standard, that makes sure that banks and other financial institutions share information about overseas tax residents on their books. And that information goes to the home state, and then the home tax authorities can compare that information to home tax returns and make sure everybody is declaring properly any assets or income they're receiving overseas. Before these regulations, it was quite easy to hide your money overseas and not declare it at home. And so that was the blind spot that's been closed here for tax authorities. Now, for DAC7, it's gig economy income is the blind spot. So obviously, over the past few years, the websites and apps to generate income are becoming more and more prevalent. And the tax authorities have no way of seeing how much income people are earning on these platforms. And we see in the media loads, people bragging about earning a lot of money using these kind of platforms. So it's kind of got nervous on the tax authority side that they're probably not declaring their income the way they should be and paying all the taxes that they should be. So the whole point of these regulations is to get rid of that, to make it more transparent for tax authorities on what kind of income people are earning through the gig economy and make sure they're doing the tax returns correctly. The scope of the regulations themselves is actually enormous. So it's a platform is kind of any website or application, any kind of technology really, where a customer, a user can log on and book a service, and the service is being provided by somebody that's not working for the platform directly. So a freelancer. The activities that are covered for this are: 1, sale of goods. So this is online marketplaces, things like eBay, Etsy, Vinted, where people can independently sell tangible items. Number 2, transportation rental. So that's the hire of any type of movable vehicle without a driver. So cars and vans, but also bikes, boats, planes, scooters, anything like that. Then there's number 3, which is personal services. So this by itself is also massive in that it's the provision of any task at the request of the platform user. So for starters, it's transport rental with a driver. So your rideshare apps, your Ubers, your delivery apps like Deliveroo and stuff like that come under this bit. And then pretty much any service you could think of that if you can book it on an app. So a gardener, a cleaner, babysitter, an accountant, a graphic designer, a hairdresser, a personal trainer, the list is endless really. So there's a massive amount of activity that's covered by personal services. And then what I've come to here today to talk about with you guys is the rental of a movable property. So that's not just holiday lets either. That covers things like parking spaces, storage units, static boats, anything that you can rent but cannot be moved from its location.
Okay, real talk now for all you hosts out there. You know that moment when your guest messages you again with, "Hey, what's the Wi-Fi code?" Or you're staring at 5 different calendars, wondering if you've accidentally double booked the cottage. Yes, we've all been there. That's why here at Host Planet we recommend Hostfully. It's basically your rentals control centre. It handles bookings across all the big platforms, syncs your calendars to ensure there are no double bookings, automates guest messages, and even creates these really slick digital guidebooks that stop all the repeat questions. Honestly, it just makes your life easier and keeps your guests happier, helping you achieve those all-important 5-star reviews. And here is a little bonus. If you're a Host Planet listener, you can get $500 off onboarding for Hostfully's property management software and 30% off digital guidebooks for life. Just hit the link in the show notes and use the codes PLANET500 for the PMS and HostPlanetGB for the guidebooks. And if you'd like a proper walkthrough, there's also a link to book a demo with Frank Bosey from Hostfully. He will show you how it all works. Less stress, more bookings, sorted with Hostfully. And so the hosts and property managers out there who will be listening to this, they'll be in various different situations. Some might just have one rental, some might be renting a room in their own house. Others will be much bigger property management companies and agencies who might have 20, 50, 100, thousands of rentals. How does it affect the different people in our audience and in the STR ecosystem?
So obviously the big target platforms are ones like Airbnb and Booking.com, where there's a massive amount of activity going on those platforms. And that's kind of why these rules have been built in the first place, because the model of those platforms is what other companies are now taking on and following through. So it doesn't really matter how big the company is. There's no minimum threshold on this reporting. So even if you're a company that runs 2 or 3 property rentals, you're still going to be in scope the same way that Airbnb is if you're running the bookings through a website or application. And it's important to say the properties, if the properties are owned directly by you or the company or your company, then that's not reportable. It's only if you use it as third-party owners that are renting the properties through your platform. If you run a listing site where you don't actually take the bookings themselves, you just refer on to other platforms, that's not in scope because you don't have visibility of the income and the bookings. And it's worth saying as well, if you are just an individual sole trader doing this kind of activity, that's also not in scope. It's for legal entities that are running a platform.
Okay, so very basically then, if you're a property management company and you know about the bookings and you know how much rental income is coming in for your clients, that's when you've got to make sure that you're reporting this to the tax authorities. Have I got that right?
Yeah, that's basically it. The platform operator, the person that is liable for the regulations and the reporting, is the entity that contracts with the sellers or the owners in this case. So it doesn't matter if you own the technology being used, if you're using third-party tech to do it or anything. If you're the entity that makes those contracts with the owners, this is your responsibility to do the reporting.
Okay, so next step then, how do you do the reporting? What is expected of you?
So the requirements are in 2 parts. There's the data collection, which is called the due diligence part. So that's, you need to collect certain pieces of information from your owners, information about the property. And then at the end of each year, you collate all that information into an annual return, and that needs to be submitted to the tax authorities. In terms of the information you need to collect, so for your owner details who are individuals, you'll need their full name, residential address, their date of birth, and their tax ID number. Now, in the UK, an individual's tax ID number is their national insurance number. And you should be quite specific about that because people can get confused about what ID number you're actually looking for. For entities, it's a little bit easier to kind of check what you're getting from them, or if you've got missing information, because most of it should be publicly available. So if you've got a company that's registered on your platform, you need their registered name and the registered company address and their company registration number, which you should all be able to find on Companies House and make sure that all matches up. If either individual or entity is VAT registered, you need their VAT number as well, which again, you can check on the HMRC website if that is a valid VAT ID or not. You'll also need the property information, the property being rented. You need the full address and what type of property it is. If it's located somewhere where there's land registration numbers, you need to collect that as well. And you will already be collecting, but what is reportable information, the bank details to where the income is being paid to the owner, that's going to be reported as well. So that's everything you need to collect kind of day to day as people are registering, or from the owners you've already got on the platform. And then at the end of the year, so the reportable period is the calendar year, 1st of Jan to the 31st of December. And the deadline for reporting is the 31st of January that follows the calendar year. So it's not a very long period of time to get all that data together and get it submitted to HMRC. The format for reporting is very specific as well. It's a format called XML, extensible markup language is the full thing of that. And it's very specific how the data is structured within it. So you're going to need specific technology for that as well. You'll have to build it or buy it or use a third-party company who does a managed reporting service. It's not something you can just whack together on your desktop.
Okay, so next steps then, how do you go about making sure that you've got that technology to report it? And then following on from that, are they contacting companies? Are they telling them that there's going to be a deadline? Are we still in a situation where a lot of companies maybe are just not aware of this?
Yeah, definitely. There's not been the best communication from HMRC, I have to say, especially my company has been looking at this internationally, and we've been dealing with some other tax authorities around the world. And it seems to be a bit more noticeable in other places in the world than what's been going on in the UK. There is some information available on the HMRC website, especially stuff you can give to the owners as well to make sure they know what's going on and why they're being asked for this information, because there might be a little bit of pushback there. But HMRC have, as I know, a couple of people have approached us and say HMRC have contacted us and said they think we should be registered as a platform operator. So they're definitely doing a little bit of investigation by themselves. I would not recommend ignoring this. If you think you might be in scope, you really need to go and find out for a fact. And if you are in scope, you need to get registered on the HMRC portal as soon as possible. All platforms should have registered, whether they had a reporting requirement for 2024 or not. They should have registered by the end of 2024. So if you've missed that, you need to get on with it really quickly.
So in relation to the XML side of things, where can property management companies go for help in this area?
So if you own your own technology, or if you've got clever developers in-house, then they should be able to build something that's fit for purpose here. You can, if you've got clever developers but they're not sure what to do, you can obviously hire a consultant who can come and guide you on that. There are companies like my own who provide managed reporting services. So we've built the tech already, and we do a full service where you send us the data, we reformat it, and we also submit it to the tax authorities for you. But there are other companies out there that are building technology which you can then plug in to your own system, and so you can do your own reporting. And some of the PMS companies as well are starting to build some functionality for this. So there's definitely a couple out there that have already done it. I know there's a couple that are kind of on with it, but you might find if you've got an American PMS system that they're not going to do anything about this, because America will not adopt these regulations. It's not going to happen. So as America do, they stick their fingers in their ears about something that isn't relevant to them. So they won't be interested in the story of you've got a requirement. You need to be looking for a third party option if your PMS is not going to do anything to do with this.
I imagine there'll be a few property management companies out there thinking, oh my goodness, this is the first I've heard about this. What would your top tips and advice be to those people who are just a little bit concerned? Where should they start?
So the first thing to do, obviously, is check whether you're in scope or not. So there's the information on the HMRC website, like with the detailed definitions and scope. Obviously, you can come to a consultant like myself. In terms of scoping, I'm doing that for free of charge. So if you just want kind of a 10-minute chat so we can look at your business model and say, yes, you're definitely in scope, or no, you're definitely not in scope. Also, maybe your short-term rental trade association is probably going to have some information about this. I've definitely spoken to a few of those and given out some advice. And also, you can speak with HMRC directly. They're being reasonably open at this point to kind of go, this is pointing people in the right direction to find the information they need to see if they're in scope or not. So definitely the first thing is scope your business model. like I said before, this is an international reporting regime. So if you've got properties on the books that are not in the UK, they may also need to be reported either to HMRC or to another overseas tax authority. The current partner jurisdictions for HMRC are Bulgaria, Canada, Ireland, Latvia, New Zealand, Spain, and Sweden. So any properties that are on your platform that are in any of those locations can go into your annual HMRC return. If you've got properties in other EU countries that I've not mentioned on that list, then you might need to register as a foreign platform operator with an EU tax authority to report those properties. From the UK, the Irish Revenue is the easiest one to do that with. All the guidance and the registration process obviously is all in English, so it's a lot easier to handle that than one of the overseas, the mainland Europe tax authorities. Also, all EU reporting is centralised, so you can tunnel anything for all EU countries through one single EU tax authority.
I guess there'll be people out there thinking, does my accountant know about this, and is this something that my accountant can deal with?
So your accountant might have heard about it, but has probably gone, that's nothing to do with me, because it's not actually about the finances of your firm, which is what accountants deal with. This is about the customers, the users of the platform and that information. So I think, like what I technically specialize in, operational tax, that is the tax authority regimes that focus on customer data, how that's collected, how that's used, how that's reported, rather than a firm's finances, which is what accountants do. And there's definitely a separation of understanding there. Like you need kind of front-facing knowledge of what's going on with the customer activity, rather than just what's going on the books behind the scenes. So if your accountant doesn't know about this, I wouldn't blame them for it. And I don't think so the type of reporting and all that stuff, it's not things that accountants are used to doing. So accountancy firm is not really where I would be going for advice here. You want more kind of regulatory compliance type firms in terms of the advice.
And those people out there who perhaps they've got one or two properties that are in their own name, they own them, and they put them on the OTAs like Airbnb, Booking.com, maybe they have a direct booking site. They don't need to worry, right? The situation they have is that Airbnb, Booking.com, the OTAs, they'll be expected to share the information with the tax authorities. Hey, this person is on our site and this is how much money we send them.
So it does depend how you set up with the OTAs. So Airbnb obviously are reporting everything that happens on their books. However, if you as a property management company are registered on Airbnb as the property management company for all your properties that you manage on behalf of other owners, then you still have a reporting requirement, because there's another layer to that reporting. You need to say, because Airbnb will report everything that's gone to you, and then HMRC need to see, okay, well, what have you done with that income? How many owners has that gone to? How is the property split, etc. If you are as an individual or as a company, you've got a limited company that owns a couple of properties and they're all yours, and you register that company on Airbnb, then you don't need to worry. You don't need to do anything else. Airbnb will report that correctly. If, as a property management company, you are listing the individual owner's details on Airbnb and Airbnb are paying your owners directly, then you don't have a requirement. But if you're receiving the income and splitting it up, paying it down to the owners, then you do have a reporting requirement.
Yeah, it kind of depends where the income is going, and then how it's being distributed. These are the key things that the tax authorities want to know. So tell us then, what are the penalties for getting it wrong? What are the steps that the companies can take to get ready?
Yeah, the penalties are quite hefty, actually. HMRC is definitely going through a phase of transition from kind of light slaps on the wrist to taking these kind of compliance situations really seriously. And digital platforms is one of the first kind of regimes where they've really ramped up the penalties. So there's a series of penalties. They're structured quite specifically. You can get a flat penalty of up to £5,000 and an additional £600 per day of continued non-compliance for submitting your annual return late. So even one day after the 31st of Jan, you could be getting £5,000 and then £600 per day. That same penalty applies to not providing the information to sellers that you've reported about them. And also, if HMRC make an additional data request, sometimes after you've reported, they might send a notice saying, actually, can you give us some more information about where you've got that income information from or something like that. There'll be a deadline on that. If you miss that, it's the same penalty. So being on time is very important. Other penalties are, there's one of up to £100 per seller, and that is for a failure to apply due diligence procedures and also for inaccurate or incomplete reports. So any missing data on the reports that you file. Now, obviously, if you've only got 5 people on the platform, then the maximum penalty you can get there is £500. But at the bigger the platform, obviously that can compound really quickly. So if you're getting a procedure wrong to do with your due diligence, that penalty could end up being massive because it's going to impact every single seller on your platform. And then there's a couple of kind of afterthought penalties, maybe. There's £1,000 for not correctly registering as a platform operator. So even if you don't have a reporting requirement, you still need to go on and register and say, I'm excluded from reporting because I don't have any reportable sellers or because no one earns a profit on my platform or whatever your situation is. And then there's another penalty of up to £5,000 per year for not complying with the record keeping requirements. So when you collect this information, you need to keep it for a minimum of 5 years. That's the HMRC requirement because they might inquire about that information up to 5 years later. If you can't provide them with the information because you deleted it, then you will get £5,000 per year. You should have kept it and you haven't. At the same time, we should mention when we talk about record keeping requirements, GDPR. So you're now collecting loads of personal information about lots of people and you're sharing that with third parties. You're in GDPR territory. So that's the general data protection regulations. If you haven't got a data protection policy yet, you need to get one straight away, and you need to elect somebody within your organization, somebody quite senior, to be the data controller, which means they're ultimately responsible for making sure that data is safe and that it's not used for anything you haven't explicitly said it's going to be used for. So you should update your terms and conditions to kind of signpost that, and also to say specifically to owners that when they give you this data, you'll keep it safe, but you are going to share it with tax authorities. They need to know that that's what you're doing with it.
I imagine most of the companies will be GDPR compliant, but definitely worth mentioning it. I'm sure there'll be a few property management companies out there who are a little bit concerned. So first step though, give Natalie a call. We'll put some links in the show notes to those vital sections of HMRC where people can find out more details. Natalie, thank you so much for joining us and explaining everything about DAC7 on the Host Planet podcast.
You're very welcome, James. Thanks for having me.
Great to chat to Natalie Dowling there about all things DAC7. I hope you found that episode useful. All right, that's it for today's episode. Remember, this podcast is brought to you in collaboration with Hostfully, which is trusted by short-term rental professionals across the globe. As a Host Planet listener, you get 2 exclusive offers. $500 off onboarding for Hostfully's property management software. Just use the code PLANET500 and 30% off digital guidebooks for life. Use the code HostPlanetGB. To grab these deals, click the link in the show notes or head to hostfully.com. For more free education tips and trends from the STR industry, visit hostplanet.club, where you can sign up for our newsletter, listen to our podcasts, and download a suite of ebooks for hosts and property managers. That's it for today's episode. Until next time, happy hosting.